Mitch. Hope everybody's doing well today, Thursday, the 21st of May. Really excited today to have Miles from Tack Advisors, a great SAP here in EO Fort Worth. So I'm going to turn it over to him real quickly, but just to give you an intro for him, Miles started out really young, interested in investing in capital markets. He graduated from Aledo and then went to UT at Austin, where he got 2 degrees in finance and economics. Since then, he's been really practicing to help business owners grow and protect their assets. In 2015, he got his CFP, and since then, he's got lots of awards, including the Centurion Award since 2014 and the $1 Million Roundtable. Outside of work, he likes golf and volleyball at the Fort Worth Club. He's really going to help us understand what we should be doing right now if you are looking to sell your business in the future. I talked with him, unfortunately, after I'd already sold my business. So I'm really interested in learning what I need to be doing right now with my other businesses so that I can prepare them to sell. So Miles, why don't you take away?
Perfect. Thanks, Mitch. So I wanted to talk today about how to prepare to sell your business because there's a lot of change going on right now. One thing that Mitch didn't say is that we've worked with SBA lenders closely to provide life insurance on those transactions over the last 8 years. And so I've been involved in over 100 businesses buying and selling. And so some of the things that I'm going to talk about are as a result of those experiences. I would say this process typically takes 2 years. And so although right now may be not an opportune time to sell your business, it takes a while to prepare. And so having these conversations now, looking at the process, looking at how to get your business ready is really prudent. And so some of the things that we're going to discuss today are, is your business saleable? This is one that we could certainly provide you some feedback on, but not everybody has a business that you could sell to a third party. Next, what is your business worth? This is something that many of our business owners, they may have a vague idea on, but they don't have a solid number. Next, who really do you need to engage professionally to help you sell the business? The answer may vary depending on your industry. And then preparing for the sale, we'll talk about some key items that you're going to need. Who are you going to sell to? Some things to think about there. And then what if you can't sell? What if you go to market and there really are no buyers? We'll talk about some alternatives. And then finally, how much do you need to live on? A lot of people have a number based on what they've seen in the past, but they don't know if that's enough to sustain their families. So we'll give you some rules of thumb there. And then finally, the last part of the transaction that's a really big piece is taxes. And we'll talk about what we see there from a deal structure perspective. In terms of some things that you will learn in talking to business owner brokerage folks, they really look for 3 years of profits in order to have a business that is saleable. We say an attractive industry, but that's a relative thing. I would tell you that private equity firms go in and out of doing roll-ups in different industries. One that I'm familiar with right now is vet practices, but previously some of my clients have sold in construction materials. And so that's a relative thing, but does affect your valuation. Location is a big part of being able to sell your business. We've dealt with manufacturing firms that are in small towns, and marketing those businesses is much more difficult than if your business is here in the Metroplex. Does your business have assets that are going to continue to be productive, or is everything depreciated And will the new owner have to buy new equipment? That's going to factor into if somebody wants to buy your business. A lot of people say, well, we have, a strong, loyal customer base. One of the feedback items that I've gotten recently with some businesses is they had too much of a concentration. So they may have had 95 customers, but 3 of those customers made up over 50% of their revenue. So that's something that you really want to pay attention to, and that will affect your multiple when selling. And then finally, do you have licenses? Do you have patents, intellectual property? Can those things be transferred? And what kind of debt does your business have? Really maintaining a healthy balance sheet is important to being able to sell. Some of the key people that are involved in these transactions, first and foremost is going to be your accountant or CPA. The number one reason that deals don't go through is bad financials. So your bookkeeping and making sure that your books are very clean and in line with industry standards is very important. And so it may take you a period of time to pull all the dry cleaning, your children's daycare expense, your boat, some of these various expenses that you're running through the business that really shouldn't be in there. And your accountant can help you with that. Depending on what industry you're in, you may need a business broker. A lot of the businesses that we've worked with clients on haven't used business brokers because they've had private equity firms or competitors come in and offer to buy them up front. But it really depends on how plugged in you are in the industry, whether you will need a business broker. Some of the things that they will typically provide, though, are an offering memorandum. They're going to negotiate price and terms, and they'll also manage the due diligence. So they do provide a service, but it's going to cost about 10% of the overall value of the business. M&A attorney can be very valuable. Depending on the size of the business, we wouldn't suggest using just a typical business attorney that you've used for contracts, just because they have a better level of experience with sales specifically. And so the contracts and making sure things are specific to your situation rather than just boilerplate can save you hundreds of thousands of dollars. So they're a really important part of your team. And then finally, having a financial advisor that interacts with your CPA and the broker to do some analysis on the amount that you're going to receive and whether that amount is enough to live on long-term is very important, because a lot of our business owners are running many of their expenses through the business, and their salaries don't often reflect what they're actually living on. So at the beginning of this process, we always ask our business owners, what is your business worth? And many of them say, I don't know. And our response is typically, if I had a checkbook and I was prepared to write you a check, what would it take for you to sell your business? And this varies widely based on what people have offered in the past, what they've seen other businesses sell for. And we would encourage you to look at not only your assets, but the revenue stream in your business to do a value, rather than just using some arbitrary measure. Typically, what you'll find is in talking with business brokers and other valuation experts, they will use the term EBITDA, or earnings before interest, tax, and depreciation and amortization, to value your business. This allows them to take out kind of non-operating items and easily compare your business with others in the industry. Typically, what we see is a multiple of between 3 and 5 times EBITDA. but that's going to vary based on where your business is in terms of which industry. So one type of business that we've helped a lot is CPA practices. And most CPA practices sell for 1 times revenue. Another business type that is very familiar to us is financial planners. Financial planners typically sell for 2 times recurring revenue. I would really encourage you, if you're serious about selling, to engage a professional that just does valuations. And they would typically involve your CPA. This is not something that you snap your fingers and get. Normally it takes 1 to 2 months. And depending on if you're using this for an estate tax calculation or just need it for a business transaction, we would expect to spend anywhere from $3,000 to $7,000 would be normal for a business under $5 million in value. So in terms of preparing for your sale, some things that are very important is resolving outstanding issues like debts. So if you sell the business and there's debt that would be on the books when you sold, typically a provision is that you'll have to pay that debt off with the proceeds of the sale. So you really want to be as debt-free as possible when you go to sell. That also makes the business more attractive. Having accounts receivable that are not more than 90 days is very important because those will be valued much less if the buyer thinks that they're not going to be able to collect. Again, your financial statements are some of the most important documents in these transactions, and so having those cleaned up is extremely important. Providing a business plan is some of what the business broker is going to do for you. Really outlining where your business stands in the competitive landscape and why people are using you is the most important aspect of that. And then making sure that your relationships, not only on a supplier, but a customer basis, are outlined. Again, concentration issues are things to watch for. And then selling old inventory and making sure that it's outlined exactly what will transfer with the sale. We had a business owner that sold a property that he had accumulated 20 years of equipment on the premises, and ultimately there was a legal fight because it wasn't clear that a portion of the equipment wouldn't transfer with the sale. So that's very necessary to outline those things. So the documents that you're going to need when it comes to selling your business are really the things that we think about. Your income statement on a year-to-date basis, your balance sheet, the cash flow statement, and then your last 3 years of taxes. And your sophisticated buyers are really going to hone in on numbers, and your due diligence process may take quite a long time. And so you need to be patient and you need to be honest with any issues that are going on in the business, because we've seen these private equity companies go back and forth on financial issues when our sellers could just have told them up front, really, this is the issue. They will hone in on it. If you're using a business broker, they're going to summarize these items into kind of a deck, and then they're also going to talk about competition and your competitive advantage. So that's something to pay attention to. Who are you going to sell to? Most people say, I don't know, but I receive calls all the time. A lot of those people calling are private equity companies. If your business is over 5 million, I think that's probably a reasonable expectation. Under that, what we see is a lot of employees buying these businesses, long-standing customers, competitors, and then people coming out of corporations. So Biz Buy Sell is the largest marketplace for businesses under about 10 million. And that's a great resource to sell your business if you kind of fit into that space. So that really talks about if things go well. The other aspect of this conversation is, what if things don't work out? What if I'm not able to sell my business? And we always urge our business owner clients to have an operating agreement or a buy-sell in place that outlines how your business would transfer if something happened to you or other key owners. And sometimes I get feedback that I don't have a partner, and so I don't have a buy-sell agreement. Well, I personally don't have a partner. I've got a junior associate, but I have another financial planner that we have a one-way buy-sell that if something were to happen to me, he would buy my book of business and my clients would be taken care of. So depending on the nature of your business, you may have somebody like that in your industry that you could do an agreement with. Having a will that clearly defines who you want to get the business is very important, and also trust, depending on the value of the business. We've seen businesses where the owner didn't have a will, the business had to go through probate, and it really created some cash flow issues because the business had cash in an account, but it wasn't transferred to the wife because there was no transfer on death provision on the business account and no will. So having those in place is a big deal. One thing that can be a huge deal, doesn't cost any money, is having conversations with your key employees. And so telling them, if something happens to me, I'd like my spouse to own the business, and I want you to actually run the day-to-day for a period of time before we can sell. That really gives people peace of mind that that they know how to run the business, they're a key person, doesn't cost you any money. And I've seen instances where people haven't had those conversations and the people have left because they don't know what's going to happen with the business as the business owner is getting older. So I think that's very important. One of the interesting ways that we've seen people sell businesses that they didn't think there was a market for is going to key employees and owner financing a portion of the sale. And so if you're having a hard time selling to outside third parties, go to your key employees. They may not have a lot of money to put down, but they may have been with you for a number of years and can run the business. And so typically in SBA transactions, that person needs about 20% down. They will do a portion of that as a seller carry. So the person buying the business doesn't actually have to receive a lot of cash, or they don't have to put in a lot of cash, but you would receive 80% of the value of the business, and then you would carry 20%, typically for 3 to 5 years. That's very common and a great way to sell a business that there may not be a huge market for. Finally, if your business is a little larger, 7 to 10 million in revenue, certainly you could think about an employee stock ownership program. There are some tax favorable treatment for this sale. but it's also more expensive to administer and set up. And so we talked to a large number of companies about setting up ESOPs, and to date, we've only had 2 that we've helped through that process. So I would just say, look at the details, see if it really makes sense for your business. One thing that we find is a lot of our business owner clients don't know how much they need to support their lifestyle once they sell the business. And so although they may receive a salary, they're also running a lot of their expenses through the business. Some examples that we see, laundry, cell phones, cars, boats, you name it. People are running all kinds of expenses through their businesses. And so although your salary may be one thing, you really need to take into account all those other perks. And so our rule of thumb typically is that a bucket of money invested fairly conservatively is going to spin off roughly 4% after taxes and fees and not go into principal. So if you have $1 million net proceeds from the sale, that's going to generate about $40,000 per year. And so that may give you pause that the value of the business that you're seeing, it may make more sense to continue to run the enterprise rather than selling, because the amount that you can receive from the sale and the income generated is much less than what you're actually earning today. And that's something that, you know, you really have to consider. So that's the great part about selling the business, is talking about how much you're going to receive, finding the buyer. The really difficult part comes at the very last, which typically involves the deal structure and taxes. And so deal structure typically is in one party's favor. It doesn't necessarily favor the buyer or the seller, but there's some back and forth. And so what I mean by that is if you have an asset-based sale, the buyer favors that because they get a step up in basis and it limits their risk. So if there's some litigation in the future and they've just bought the equipment of the corporation, they don't have any obligations. The seller, on the other hand, they want to do a stock-based sale. And the reason is they receive capital gains treatment for their stock. We see a majority of the sales that we have participated in with our clients as asset-based sales because the new buyers don't want to take the risk. And some other things that you need to consider is depreciation of assets and goodwill can result in ordinary income. So when I bought my practice from my father, he had purchased a portion of the practice from his partner and depreciated goodwill over 15 years. What happens in that instance is that you have recapture, so whatever you depreciated results in ordinary income. So the purchase price may need to adjust based on that tax treatment. We don't see them a lot, but C Corps have taxes paid twice, once at the corporate level, once at the individual. And we really encourage our clients with C Corps to look at reorganizing their businesses rather than continuing the sale in the form of the C Corp because of that dual taxation. There are some ways to mitigate that tax, but it's really kind of a mess. And we would encourage you to work with your accountant. Again, that takes about 2 years to transfer from a C to an S, in my experience. So again, The advantages of an asset purchase are your step up, and then goodwill is tax deductible. So paying for amounts above and beyond, you're getting a deduction. Stock purchases, you can assume non-assignable licenses. So we had a business that ran jewelry stores in airports. And a key aspect of that business was all of the contracts being in the name of this entity. Well, the people that were buying that entity couldn't change because it took 20 years to build up all these contracts. So they had to do a stock purchase. Tax cost for seller is lower. Obviously, the seller loves that. And the acquirer doesn't have to bother with retitling or transferring individual assets. So some really good resources that I've found. Biz Buy Sell is a really interesting marketplace for selling businesses. I mentioned our experience in the SBA. I would say north of 60% of the business owners that we help found their business on Biz Buy Sell. So I think it's a good resource. If you don't know what your business is worth and you'd like a valuation, we have a tool that if you give us 2 years tax returns and can fill out a brief form, we can get you a valuation. And that isn't something that I would take for estate tax values, but I think it would be valuable just to give you a place to start if you're kind of thinking about where you are in this process. In terms of business brokers, it can be hard to know, who's good, who's bad. The Texas Association of Business Brokers is kind of one of the larger resources. And then Biz Buy Sell also provides a listing of brokers on their platform. I would also talk to people that have sold businesses in your industry and see who they use, because really good brokers tend to specialize. Some books on this topic that I found valuable, Built to Sell by John Warlow, and then Guide to Selling Your Small Business by Barbara Schmick. That was actually put together by Biz Buy Sell in collaboration with Barbara. And I can send a copy to Ronnie for those of you that may be interested. So Ronnie, we've got a little time for questions. Oh, I think you're muted. Ron, do you have any questions?
Oh, sorry. I thought I was talking. I've unmuted everybody. So any questions from anybody? Oh, Susan, I haven't unmuted. Anyone got any questions?
What were those books again, Miles?
Built to Sell by John Warlow, and then Guide to Selling Your Small Business. And I really like Guide to Selling Your Small Business because it has a lot of checklists that you can kind of go through, and it talks about how to improve your valuations. So again, it's more of a, here's where we are, this is what we can do to get a higher multiple. And so it helps you to go through a process.
Anyone else? Any questions? Ron, Ken?
No, Miles, this is Kent here. I think you've done a real good job laying things out. Is it possible to get slides sent to us? Is that in the PDF deck or anything that you can push out?
Yes. Yeah, I'm going to give it to Ronnie.
Appreciate it. Thank you.
I'm also recording this, Kent, so I've got a recording of it, so you can watch it as many times as you want.
Yeah, Miles, real good presentation. It was sort of like drinking from a fire hose, listening to everything, and I appreciate what you did. Thank you.
Well, and I know there's a lot of information. Again, I think some of these resources are good. And if you want to talk offline, if we can be of help, please just give me a call.
Okay.
Excellent. Thank you, Miles. I'm going to stop recording that.